Welcome to Cyberbulls, everyone. So why Tesla? What is it about Tesla stock that bulls are seeing that others don't? While the stock has been relatively flat for 3 years now, there are many who are now forecasting a massive margin jump. When might this happen? Today, we'll discuss the major milestone achieved in China, where now more than 50% of all new cars sold are new electric vehicles, and it seems there's a big secret traditional auto has been hiding that they won't be able to keep hidden much longer. So we've got the bulls here with us. We've got Jeff Lutz, Mr. Incredible, Xander Sky, the Froyo Tycoon, and joining us this week is James from InvestAnswers, the Analytical Bull. Welcome, everybody. Okay, so let's start with why Tesla? Let's start with that question. James, what is it about Tesla that you're seeing that other people aren't?
That's an interesting one. Let's just jump straight in. First of all, I think everything that they do, well, stepping back for a second, I spend a lot of time focusing on the people that run organizations. I think it's the first step before you invest in something, who's running the show. And there's no doubt that, and I've been watching people like Elon Musk for 20 years. He is the number one capital allocator on earth. So whatever he touches turns to gold. Everybody still doubts him, even after his track record. And I think that's a little easy kind of cheat code right there. Just look at his record and project that forward. Second of all, Tesla pushes the boundaries of everything it does, the way it makes stuff. Builds the factory that is the factory, or what is it? Builds the machine that makes the machine type of thing. Autonomous driving technology, clear leader. I just drove 11 hours over the past 36 hours. The car, literally, I would not feel safe in a car without it. Energy storage, leader on the planet. Soon bots will be the leader on the planet. The investments they're making in AI are massive. Also, energy storage. I mean, the world needs more energy. It's clear electrification is coming. AI is driving a huge amount of demand. We have a reactor in the sky. You just need energy storage. And they can sell those power packs at high margin for as long as they want. And also, what's very interesting is the competition. If you look at all the incumbents, other than the Chinese EV makers, everybody's dead. I mean, there are zombie companies, as clear as day. People say the competition's coming, and you look at the Ford and GMs and the BMWs and the Volkswagens and all these firms, they're just toast. They can't get out of their way. So there's just some, like, I could talk for 2 hours about what I see that others don't, but that's like 4 or 5 little short bullets that people still fade Elon, and I don't know why.
The company and the product. I don't look at the quarterly stock movement.
A very realistic bull, questioning certain decisions.
The rational bull. They enjoy listening to bears.
Looking for the red flags. You're supposed to react.
Industries that are ripe for disruption, and then invest hard.
Okay, well, later we'll have Jeff Lutz actually share information he's got about how the traditional auto is actually in dire straits. But James, the big question everybody always says is it's all about margins. I'm not going to invest in Tesla right now. The margins have been flat. I expect it to fall. What are you expecting to see?
Yeah, it goes back to kind of history. And I remember, I think I even spoke about it 6 months ago or more on this channel, that people like Wall Street is obsessed with kind of PE ratios. And it should be, I remember Jeff Bezos, I can't remember exactly what it was. It should be free cash flow per share is what's important, not price to earnings ratio, especially when you look at the colossal investments that this company is making. And you look at, again, the landscape. Who's going to be able to compete with them? The answer is nobody. So the focus needs to be revised from Wall Street away from looking at traditional metrics to looking to where the puck is going to be 6 to 18 months from now. That's what's important.
Nice. Okay. So, Xander, you were saying that there's something about the stock, Tesla stock right now. What do you expect to see, especially with the economy? What are you expecting?
Well, first I'll answer your question. Why Tesla? I think that once the bankruptcy risk was removed with the Model 3 ramp and we went to profitability, that's when I kind of, in my mind, as a classically educated, by index funds, I started looking at the jockey, right? That's the first thing that I looked at. And, for all the hate that he gets, for all the politics and I don't worry about any of that stuff. Ultimately, it's going to come down to, as James was saying, it's going to come down to earnings. So the TAM is what I look at. I look at the total addressable market. They're disrupting industry after industry after industry, and in fact, they're inventing new industries. And the robotics space doesn't exist yet. So the amount of money that's going to flow into both compute and then also like robotics, it's just phenomenal. So that innovation and that leads to this optionality that we have in investing in Tesla. So that to me is the most important. And why why am I not scared by this shakeout in the market? I took assignment on shares this morning at 220, and the cost base is like 212 or something like that, or 209. I'll see it this evening once it actually posts. And I'm not worried about it at all. I'm going to sell covered calls against it. It's trading. Like, I'm happy with it. But if we start ripping, that's when I start looking at it. The important thing that I want people to kind of take from my lens is that during these fearful times, it's obviously good to have cash to buy the dip, but not like the initial dip, but like the real one, the one where you're crying looking at your portfolio because it's been multiple days of red. So that in that regard, what we're seeing in the markets is actually very interesting. The conversation regarding recession is important, and like today, Tesla having multiple bull flags and then next leg up and to break through 200 is actually a really important thing to note. So I don't know if we want to talk about that a little later, but that's kind of my thoughts on.
Yeah, let's do that. Again, we'll address what's happened to the economy because the things have changed. So Jeff, you say that you like to talk to bears. What is the bears' arguments that you think is actually valid, and which ones do you think is not valid? Why Tesla? What is it that you see that others aren't?
Yeah, I actually had a space with one of the more prominent bears this week, and it was fine. It went well. It's a good exchange of information. I think you have a great agenda, Herbert, on the show today that people should really want to listen to. The why Tesla question from me, and I've come from this supply chain background and experience, multiple decades of experience, and to me, it comes down to scale. And anything that Elon and his companies enter into, he enters into it from a perspective of acquiring scale and really that breakout or escape velocity and scale. But to get to that point in time, you have to have the right product, the right unit economics. So it's something that can actually be scaled. And that's what you see a lot of the competition actually struggling with. So number one, scale. And it's even inside of auto, it's the subcomponents inside of auto. It's battery modules and scaling that supply chain with partners and themselves. It's the charging piece of it, and then getting that to scale. You wouldn't have the EV transition that you're having without the charging infrastructure in place. Energy, bot. We can go to other companies as well in terms of SpaceX. The rate of spacecraft production, that's another volume play, and that's going to increase in scale play, and that's going to increase as well. What does that give him and his companies? It gives him both internal fixed cost leverage as well as leverage with the supply base. So when they have to go out and they have to take risk or they have to bet on Tesla or bet with Tesla, suppliers are going to bet with Tesla because they have a history of saying, I'm going for this volume. It's a reasonable target and I'm going to hit it. I'm going to show you how I'm going to do it. So scale is the number one thing. The second thing is once you have scale, that rate of innovation is important. That's why you hear Elon say, basically like he's not as concerned about patents as he's concerned about the pace of innovation and continuing to out innovate. And what have they done right now? It kind of goes into my third point with AI. They have demonstrated AI leadership. And what you're going to see is some nonlinear, and we already are starting to see the improvement from FSD 12.3 to 12.5 has literally gotten me to the point where I was, considering, like, for example, a non-Tesla EV before 12.5, and I'm not considering it anymore because of the size of that jump in performance. And that's partly a rate of innovation thing, but it's really partly what they're able to do with AI and what they're doing. When I go, it also
I've
goes
created
back
a
into the
website
scale
that is the
comment
most
and their
comprehensive
ability to
resource
scale
for the
that data
Tesla
center in
investor.
Memphis. I know
Please
it's
check
for
it out.
XAI,
Simply
but
go to
in
my
19
website
days,
at
Elon's measuring
herbertall.com.
stuff like that. He's measuring from time equals 0 to the operation getting to its peak run rate or velocity. That's a really important thing in supply chain world with scale. So scale, rate of innovation, AI leadership. The final thing that you don't hear analysts talking about is Tesla's supply chain. Gartner is a well-known, world-renowned rating agency, consulting agency in the area of operations and supply chain. They'll work with Procter & Gamble all the way through GM, Ford, you name it. And they have a top 50 list every year of supply chains. And Tesla emerged last year as the number 14 supply chain in the world, not the number 14 auto supply chain in the world, the number 14 supply chain in the world. Computer companies, you name it. Everything is inside of that number. Packaged goods company, Tesla's number 14. There wasn't an auto company above Tesla in 1 through 13. The only other auto company that made the list was Toyota. Toyota has a wonderful supply chain, and they should be on that list, but they are well below where Tesla is. Tesla does not get credit from the analyst community for their supply chain, much less AI, what I talked about earlier. And it's a very big deal. It's how they got into and out of COVID in better shape. It starts from the top of the company all the way down. And that culture that's been instilled around design for manufacturability, around low latency supply networks, around the best process is no process, getting rid of things like dealer networks, for example, and going direct to consumer. These philosophies actually all work together 1 through 4, and it's helping Tesla be able to scale. So my reasons are why Tesla: scale, number 1, 2, rate of innovation, 3, their AI leadership, and 4, their supply chain, which they don't get credit for.
Okay. I mean, all of you guys answered, reasons why Tesla. But if you talk to the bears, and not even just bears, just people who decide if they're going to invest in Tesla or not, they said that a couple of years ago, Tesla was an earnings machine. They were growing 50%. This is great. This is, you can see the growth. This is a beta company, a beta stock. This is a growth comp. But margins have been flat. Margins are falling. We're in between 2 growth waves. So let's start with that next topic, James, which is margins flipping. Why did you think, and why are you saying that you believe, and when do you expect the margins to Tesla to actually flip?
Well, I think we're right on the cusp of it. We're talking 1, maybe 2 quarters away. There's a couple of things happening. First of all, the competition is folding, so it's making it easier for Tesla to acquire stuff like lithium, batteries, other, because all the other so-called EV makers have just capitulated. They're scaling back. So now Tesla can dictate terms. But I'll defer to Jeff on that because he's far more experienced. I do believe energy margins are very sustainable and growing. And we just saw that in the last quarter. And that's going to become, 25% of bottom line attribution to 50% in the next maybe year. EV margins, I think, will be able to grow again as well once rate cuts come into play, because that drives a huge amount of cost into the cost of the vehicle. A lot of people in the US, for example, finance their cars. Once the rate cuts fall, that will have a huge impact on margins, because then they can increase the price of the car while the rates fall, I believe, is a potential lever that Tesla can deal with. And of course, SaaS revenue is very exciting. Just talking about the cars themselves. If the FSD take rate starts upticking, I do believe in a year or so, considering how good it is and how I would not get into a car without it, we could see 20 to 50% penetration on the take rate for FSD. That means each vehicle on the road is kicking over $100 a month to Tesla. And there's no other car company in the world that can even do that. And that's on top of, $10 for connectivity, and who knows what else they're going to come out with as well, and the robo-taxi as well. So I think we're on the cusp of a lot of good stuff, and I'm not even talking about some of the other things that they have in the works.
Okay, well, the stock is at $200. Do you guys think that you need to see margins, materially being improved before we see the stock move along with it?
Wall Street does.
And Xander?
We got a glimpse. We got a glimpse of what happens when Tesla announces something that can change the world, right? We're recording today. It's 8/8. You'll get it on 8/9 when you're seeing this, but 10/10, and if that doesn't get canceled, in my opinion, I think there will be the same thing that we saw, the 180 to 270 FOMO that's going to kick in. That was not retail money, in my opinion. $200 billion move does not occur because of just some retails pulling some money out of the couch cushions. So I think that depending on what we see, that will launch the rubber band, but Wall Street is waiting for earnings to, like the other thing we talked about. We're in the consumer discretionary bucket. That is also something that until we get credit for being a technology company, I don't care. I don't care if it's 250, if it's 200, if it's 150. Which way is it going to go from here? I don't know. Right? We might have macro pressure that can force it down. I'm buying, and then my trading portfolio, I'm going to flip that into a long-term portfolio. And it's just because when those things occur, in my opinion, we will have this rubber band breaking.
Mm-hmm. Jeff?
Yeah, I think so. The stock has demonstrated that it can move regardless of this information coming in. Last year, May to June, it doubled. And there were some supercharger announcements, but there wasn't anything on the margin side or the EPS side that necessarily supported that. And it tripled from January to July of last year. So the stock has proven it can move. But with that said, Tesla does need to demonstrate that they've bottomed and the compression on this spring is mostly done. And I think that's important. What you had last quarter was an artifact. And we talked about Q1 before Q1 ended. We talked about Q2 before Q2 ended. And what did we say? At least what I told you is if they decide to burn off the inventory, you're not going to see the gross margin improvement you'd like. Tesla made that decision. They freed up working capital. They burned off the inventory. They have industry leading, 18 days of inventory. But they lowered production. Production was 30, 40, 35K units or so less than their output. And when you do so, when you lower production, you lower your utilization rate in your factories, your fixed costs are still there. They don't go anywhere. So now they're dividing over a smaller number of units, and therefore the cost per unit's higher, your gross margins are lower, and then they're under pressure. So what's going to happen in this quarter when they take that 410 production up to some bigger number, 10%, 15%, 20% higher, who knows? The answer is their costs are going to come down. And the costs come down in two ways, for two primary ways. There's event-driven action. So there's ideas that they have, and they take those ideas and they roll them into design, they roll them into the gigafactories, or they roll them out to suppliers. And the second way is through getting increased leverage on your fixed assets through greater volumes. So if both of those things are happening concurrently, and Tesla told you on the earnings call that outside of Cybertruck, their COGS on S3XY were lower. So it's really important to understand what we're fighting against. We were fighting against a smaller build total and the increased ramp of Cybertruck. Every Cybertruck they build is a net drag on margins, okay? And that will continue through the end of the year. So if they build a lot more Cybertrucks in the third quarter, that net drag is still going to be there. But if they can increase production precipitously versus the prior quarter, you're going to see some improvement. And if they do it again in the fourth quarter, you'll see even greater improvement. And then finally, Tesla's going to fix this structurally when they release the newer vehicles in the first half of 25 they're taking new modules that are designed to be at a lower price point. And now they're going to fix it structurally so they can put a stopper under the 3 and Y in terms of those ASPs being under pressure. And now they have these new products that are slightly under them that will increase volume and then take up those portfolio slots so they don't have to continue to grind down an ASP. So that's how I see it playing out.
Yeah. And James, you were saying that you're kind of seeing what Tesla's margins were low is similar to what you saw with Amazon. What was that story? You're on mute.
Was the time, it was more about the principle of how Wall Street looks at PE ratios. Everywhere you go, it's like, oh, it's trading at a PE of 99 and Ford's trading at a PE of 5 or 6. It's just, it doesn't, but that's just the wrong way to look at things. And that's where things get broken down. Yes, margins are important, but also if you look at the space and about all of the bottom line profit that this company is about to turn on at the flick of a switch, it is mind-blowing. And the investments that they have made and what they've built and how they still churn out EVs at a 16% profit is mind-blowing. There's no other EV maker on earth can do that. But nobody sees that. And that's quite frustrating. Well, it's actually very good, because the silver lining for us is we get to stack at a far cheaper price before the sheep come in. So
when does margins explode? Is it 2026? Do we all think it's 2026 on this panel?
I think there could be some growth surprises. You know, Elon was talking very confidently about making north of $100 billion. Energy will continue to sell like hotcakes. The question is how much can be realized. And FSD take rate, we still don't know what's behind that and how big it is. But I think with 12.5, that could open up that whole opportunity for many customers to pay that extra $100 a month, which would just, again, that's a lot of pricing power and a lot of bottom line revenue, which is impactful. I think see.
I was going to say, just FSD take rates explode when they get qualified to operate in other regions. And the more people that get exposure to 12.5 in North America, it's still a small percentage because it's only available right now in the hardware for vehicles, and even a smaller percentage of those. But as FSD expands, margins will expand. And remember, this is the thing that I don't hear enough of the analysts talking about, and this is part of my bull-bear debate this week. You have to ask yourself, has Tesla been pretty accurate when they call a number in terms of vehicle production for a year? Historically, they've been accurate. Mm-hmm. Historically, and Tesla suppliers will tell you this is too, is that they've been pretty accurate. And so if you take that and you store that, when Tesla told you that 2023 was going to be a little bit tough, it ended up being a little bit tough. When they told you 2024 was going to be, a little bit tough and kind of in that range, it has been. What did they tell you about 2025? They said that they're increasing their capacity to 3 million units, and they're increasing their production 50% over 2023 levels. They don't want to talk about 2024 because it's a year that's currently in progress. So Tesla's been historically accurate at doing this, and they just told you what they're doing for 2025. I'm not sure why analysts aren't putting that together and saying that's more production, that's going to be more revenue, that's going to be more earnings, and their COGS are going to come down from a fixed cost perspective, and their COGS are going to come down because they're producing these newer vehicles. I'm a little surprised that 2 and 2 aren't being put together. But maybe I'm not surprised, but it's right there in the earnings report, page 10.
Yeah, I was going to add that it really comes down, and by the way, both of you, great points. It really comes down to, I can't even, you guys are answering the same thing that I was going to say. But it really just comes down to that. Like, do you believe Elon when he says that NVIDIA moment, that Amazon moment, right? Is that going to happen with Tesla in the future, where they just turn on, all of a sudden you just have all this revenue and all these margins and all this profitability that piles into the business? This is a growth story. It's these comments from Elon, whether at the takeover or the earnings call, it just really, do you believe him or not? And if you don't believe him, then you're going to be a bear and you're going to call for some low number. But if you're actually paying attention to, as Jeff stated, right, Elon's predictions regarding how many cars they deliver in 2020, dead on, right, to the 350 cars lower. He predicted when he sees a turn in the economy coming, or for this year, mid 2024, he's calling that. He called that a year and a half ago, 2 years ago. Yeah. It's just, he's prophetic regarding it, and he's driving teams to move, forward, and forget the noise, forget all of that stuff. That's how I remain bullish, and I am looking for red flags. So if that's my responsibility to my family. So, but I don't see any. So I just keep throwing it in there. Good and tight.
Jeff, when you had that conversation with the bear this week, what was their position? Oh,
I'm allergic. Sorry. Can you repeat that, Herbert?
To bullshit. Sorry.
You had a conversation with the bear this week. What was their position?
Yeah, the conversation went well. I think it went better than some of the back and forths you see on X. And the position is do you believe Tesla? And you don't have to even put it down to a person in Tesla. But if I go back to their ability to forecast volumes, they've been pretty accurate at it. And then the other conversation it came around to, and I'll talk a little bit about this later in the call, is that they're structured fundamentally differently than other people that build cars. And when I say structured, I mean structured in many ways in terms of their supply network and their end-to-end network of building a product and getting it to a consumer. Also, they're structured differently in terms of how they develop product. And so we try to get down to things during that debate that you can't dispute, like there's yes or no answers to, versus just platitudes and I believe everything's fake or not. But it ended up being a very good discussion, and it also really kind of dispelled like what's going on in the industry, especially as it relates to inventory and other trends in the industry. And it was a good. I just encourage people to listen to it, and maybe we should have more. I think we should have more bull bear debates. And you say like I like to listen to bears. I actually do, especially the informed ones, because I think anything that you're invested in, whether it's a stock, an equity, or whatever, you should try to understand the all contours of it, including the bear side of it, so you can pressure test everything. What
did they say? Who was it? First of all, is it Mechanica or no? Who was it?
It was.
He means machine.
Machine. No.
No. It was Brad. Yeah, it was Brad Munchin.
Brad
but
Munchin.
I don't know. We have to name
we don't
names
know who he is
in terms of.
Yep.
Okay. Yeah.
Yeah. No, that's his X handle. But what was there? What did they say that was a good point? Because the next topic we're going to talk about is what is the bear case for Tesla in 2025?
Well, it's just a question of, do you believe that these new vehicles that are coming out in the first half are going to come out on time? Do you believe that they're going to be meaningfully lower in cost? Do you believe that Tesla is going to do something meaningful from a design perspective where they fundamentally distinguish these from the 3 and Y today? I think part of the bear case was you don't have the bells and whistles or the kind of differentiation that others do in their product lines from like year one of their product to year 5 or 6. And Tesla, gotcha. They kind of really underdo some of their refreshes per se. I don't know if I necessarily agree with that, but that was one of the that was one of the assertions. The other assertion is, do you believe like in the growth that Tesla has planned for next year? And that's the other piece of it. Good questions, but good conversation.
Okay. James, do you want to jump in with your bear case for 2025? Did you have slides to show?
I do, but they're a little bit messy. Well, they're not completely comprehensive, but let me pull up one. Hold on a second. Because that's not the one. Hold on. Bear case should be number 7. Is that the wrong deck? There. All right. So this is just a few little bullets just to jog kind of a conversation. First of all, the competition are selling at a severe loss, putting pressure on margins because they can't have inventory rot out there. Mm-hmm. That could impact sales. Like, Jeff, you stunned me when you said I was considering a non-Tesla EV. I was like, what? Pinch me. Anyway, I hope that was just a bad joke. Second, margin pressure without heavy rate cuts. That could impact growth of sales because vehicle sales in general, not Tesla, any car company, they're being destroyed now by heavy interest rates. Okay. So remember, people think, oh, it's, Tesla suffering, but it's not. Every car company is suffering. Supply chain risks, I think they're the lowest since 2020. Again, I will defer back to Jeff on this one. The ICE competition is dying fast. So it means there's less demand on resources, which can be a tailwind for them. But you never know what could happen. There could be production constraints. There could be, I don't know, regulatory approval issues for certain types of things. Maybe, I don't know, the US or other markets could open their borders to cheap Chinese EVs, which could impact Tesla as well. It could be a black swan event. We just had a taste of a little bit of gray swan last weekend. And market conditions, again, we don't know what could happen. The economy is bad. The macro is bad. The unemployment numbers are bad. There's a commercial real estate crisis. There's credit crisis out there. I saw record numbers of credit card loans today for the first time ever. Right. There's a lot of dark clouds on the horizon. That would be kind of the bear case. But I think if anybody is positioned to come through it unscratched, it's Tesla.
Yeah, that's what it comes down to. With the lower network latency, Tesla saw the slowdown in auto before everyone. When you don't have 75 to 100 days of inventory, that's been the span, by the way, for the rest of auto from the beginning of the year through July. That's the average span. And there are some automakers that have 150 days of inventory. Just do the math. That means they could theoretically not have to build anything for 5 months, and they'd have product to sell. Just think about that for a minute. But Tesla would definitely come through it in better shape. I want to just touch back on the supply chain risk. One of the things that this is what companies do, and they should be doing from a proactive perspective. I don't need to tell Tesla what to do, by the way, because they have an outstanding supply chain. But if I were in the position they were in right now, the one thing I would be doing is examining my supply base for suppliers that are overly levered with the ICE auto industry. And the reason is as those volumes continue to come down, their fixed costs are going to remain, and their inefficiencies are going to increase. And they could run into some real trouble because they have had a lot of capacity tied to that. So if they have an EV side of their business and they have an ICE side of their business, that they definitely want to be on top of the financial health of their suppliers, just in general. Be on top of the financial health, because the auto industry is going into, I believe, it's already started a very big slowdown. But the other reason is if they have an EV and ICE side of their business, for whatever reason, that ICE side of it could literally tank some of them. So that's just something they have to have a proactive eye on.
That's gold. I can't believe you're giving that advice for free. Good job.
If it's true, and one thing that's not really discussed as well, the precision at which Tesla can pull levers. So, for example, cut rates to zero for a few weeks, clear out inventory, boom, gone. The shelves are empty overnight. Or tweak, paint colors, whatever, region by region, area by area. I don't know, maybe, Jeff, you do talk a lot to this, but it's worth maybe just double tapping on the levers that they pull that no other car companies can pull.
Yeah. Definitely on the inventory side, there's some levers they can pull. That's one of the things. The other thing that they can do is because they're they're fairly stable in volumes, and quite frankly, if you look ahead, if you're a supplier and Tesla tells you they're building a vehicle that's going to be 20% cheaper than the vehicle they're building today, and that vehicle happens to be the number one selling vehicle in the world today. When Tesla comes to you, Tesla has people fighting to do business with them, literally fighting to do business. And they may have two people fighting to do business and then therefore going at each other on cost. But the even bigger thing is they have the third person coming in and trying to disrupt the first two. And it's hard to put a number on that. I think people talk about cost reductions and they think about, like I said, event driven, they think about scale. But this whole element of they can really drive competition in their supply base in a very healthy way, because you make the number one selling product by volume. Therefore, if anybody gets an award with Tesla on that product, they have the highest volume single SKU model item that any other supplier would have in the industry. So that by itself is a lever that they could pull. Tesla, and they've said it on 2 or 3 earnings calls ago, one of the supply chain leaders came on and said, look, there's another way we take cost out. We leverage our new products and we leverage those negotiations in. So they could be having a conversation about the Cybertruck and saying, hey, look, if you want to get to the bot or if you want to get to the compact vehicle, you got to help me with X, Y, and Z on the Y and the Cybertruck. And usually they'll get that help. And again, what does that mean? That means that supplier is going to take lower margins for a period of time so they have a door to open up to get to something of greater volume. So it's actually a true win-win relationship. And that is, Tesla can create that, others can't. And it's not just suppliers, it's anybody who works with Tesla, anybody who's a construction or in of their factory, any one of those things Tesla can lever. So they have leverage that others don't have. That's the biggest thing that they can pull on. It's just honestly their operational leverage.
Oh, Xander, every time Jeff says something intelligent, he sends me an invoice. So
Yeah.
Yeah.
That means you got a lot of invoices.
You only got one invoice this year.
You cannot send me an invoice, dude. Lots of very intelligent stuff. Bear case for 2025 is pretty big, but I want to share this really big, good milestone that's achieved in China. They're now selling more than 50% in electric vehicles. This is a chart that was released by the China Passenger Car Association. And the first time in, I guess, history here, in July, last month, the new energy vehicles, which includes electric vehicles as well as plug-in hybrids, is now 51% of all cars sold in the Chinese car market is now a new energy vehicle and have surpassed the combustion engine vehicle. So what I wanted to ask Jeff, no invoice, please. But Jeff, I was talking to Larry about it, and he was saying that, when you have a traditional automaker selling a certain volume of cars, and then all of a sudden one of the markets, a big giant market like this starts to contract, what then happens is dominoes to supply chain to then their ability to do a profitable business.
Yeah. What OEMs do is, and what suppliers to those OEMs do, is they take that chart and then they plot the next 2 to 3 years out. And they say, where's that line going? And based on where that line is going is how they make their capital and labor decisions and investment decisions. And they put partners into groupings in terms of, are we going to lean in and work with these guys? Or are we going to kind of basically say, just get away from me? The other thing that's going to happen with that, so that's for the line that's going up. That's the EV line. So the EV line is going to get everybody behind it. The CapEx is going to move that way. The brain power is going to move that way. I can do a whole show on, what it's like working with various teams to make a product, and the team you get, if you're working with suppliers, when you're on that up curve, you're getting the A team. When you're on that down curve, you're on D through F. And it's a big difference in terms of performance. But the bigger thing that happens when you're on that down curve is those fixed costs don't go away, but the volume's going away. So the volume going away, but the fixed cost is there, the actual cost per unit and the cost to do business becomes higher. And that's where the problems come in. So you're losing talent, you're losing resources, but you have just pure economics at play, and the cost structure to serve that industry is going to increase. Yet the labor pool is there, and everybody, so you have a real problem. This is what creates a lot of carnage as industries transition. So in short, you're going to get the dollars, you're going to get the brain power going behind the curve that's going up, and people are going to plot that curve out a couple of years, 3-4 years, and they're going to be making investment decisions now. They're going to do the same thing with the other curve, and they're going to cut those investments off. They're going to be moving the good people out, and quite frankly, the gross margins and the cost really come under great pressure in those situations. And those industries tend to just kind of fold in on themselves. It becomes a really difficult situation.
So one of the reasons why that's happening is that in China, the prices of electric vehicles it's now cheaper to buy an EV than it is a ICE car, gas car. You can see here that in the first quarter of 2024, it burst through the 50%. So this is the green is electric, so it looks like 60% of all electric vehicles are now priced lower than the ICE car versus the light blue, which is, the remaining amount of electric vehicles that are still priced higher than electric vehicles. And you can see here that this is by drivetrain. And so the gray is ICE cars and industrial internal combustion engine. Then you can see that the price of the purple, which is the plug-in hybrids, and then you can see the price of the blue, which is the battery electric. The first time the price of a battery electric vehicle is actually lower than all of the others. Mr. Analytical Bull, have you been following this?
Oh, yes. In fact, there's one, getting back to the previous slide, I want to share one slide too, right here.
This one?
No, it's on, but it's my slide. Yeah.
Your slide. Okay. I got you.
This is stunning. And we have, Norway. It's not China, but it's Norway. But the point is, EV sales are nearly 95% of all sales right now. Yeah. And we all know about the tipping point, and we all know about S curves. And we saw China go from 0 to over 50% in 4.5 years. Okay. The fast part's coming, and the rest of the world is following. This is the canary in the mine. Now, the other thing that you shared regarding the ICE car cost, that's about to explode on a topic we'll talk about later. But this is not that slide. I had another slide that shows you the total cost of ownership that people don't realize. I'm actually writing a paper because I convinced a personal trainer of mine. He had a car. He said the gas is killing him, costs him a ton of money to insure. And he's got a long commute to work every day. It's like 40 to 50 miles every day. And the car was called a Subaru WRX or something. And, typical, whatever, personal trainer car, very fast, makes a lot of noise. But it costs a ton to insure, a ton to finance, and a ton to fuel and maintain. So I got a breakdown from him of all these expenses. I put them in a spreadsheet. I got him to lease a brand new Tesla at $329 a month, get Tesla insurance. He lives in an apartment building that has free electric charges. That's how this whole conversation came in. He knows what I drive and everything else. So not only did I, Tesla pill, red pill him, but now his colleague did this exact same thing. So they're both driving brand new Teslas instead of 5-year-old other cars that cost a fortune. And I calculated for him, he'll be able to save, I don't know the exact numbers per year, but it's north of $5,000 a year in savings. And I told him, you take those savings and you allocate it towards Tesla to get on his path to 193 shares, which is be enough for him to retire. in by 2032. So it's a whole financial plan without financial advice, and he's implementing it. It's mind-blowing. I'll do a Substack on it later today or tomorrow. But it's fascinating. And this goes to the total cost of ownership. Like I have a 5.5-year-old X.
Yeah.
Zero maintenance. It's almost alarming. I just had to change the tires 2 weeks ago for the first time ever. The back one ran out on the inside. It was down to the wire, and I didn't even realize till later. So these cars are just, when it comes to people saving money, you can't beat a battery electric vehicle. I know the petrol heads out there are going mad saying, no, I like my gas cars.
I like the Rumble.
Yeah, there you go. Maybe you can get a soundtrack for a Rumble. You can play it in your Cybertruck.
That, yeah.
Look, I have a motorcycle. The Cybertruck will bring my motorcycle to the track. It's never been to the track. That's why I'm known as R6 Alex for my bike. And I get the rumble. I get the smell of the fumes. I was just telling my dad last night, I'll get to change the oil. I'll get to do all of those fun things that you enjoy about gas. But when it's time to go, I just got permission to sell my dual motor and upgrade myself to the Beast, which my VIN got rejected. And I want to go 0 to 62.6 seconds with whoosh, just you're gone. And once petrol heads understand, and I'm coming from that world, I love performance and precision and all of that stuff. Once you realize that you're like a ninja and you're just gone. And the truck is climbing up the hill. I'm in Austin. All these trucks are climbing up the hill, but mine is just, it's effortless. It's gone while you're changing gears and blowing smoke, and you're like, you do all that. We'll do. But I wanted to touch on the decline in S curves or the increasing S curves of adoption. Moore's law, Wright's law, Tony Seba. If you don't know this stuff and you're considering Tesla, you have to do your research on. This is what ARC. The reason Elon continues to state, ARC's research is the best. It's because they've looked at this research of what happens when compute costs decline, what happens when battery costs decline, and how quickly the adoption curves can occur.
So there's a disruptive technology, electric vehicles, and it's slow at the beginning, so people are discounting it.
So first 20%.
And it looks like that traditional auto gas cars are still surviving. But I've got secret information that I got from Jeff Lutz that I was able to not be invoiced, but I am paying for his subscriber on X. If you guys aren't paying for that, $4 a month, this is the kind of info you're gonna get. This is just fresh off today. He pointed out that if you look at Cox Automotive Research, in July, 2.94 million cars in total U.S. inventory. That's up 1 million from the prior year, 100 days of inventory. This is what traditional car makers are having now. They've got now 3 million cars that are sitting in inventory, and it takes them 100 days to sell that, or 100 days worth of it to sell. Tesla, on the other hand, in Q2, they have 106,000 cars in global inventory, maybe up 40,000 of that in the U.S., and that's 18 days, global days of inventory versus 100 days of other automakers. Jeff is saying it looks like that the broader auto market is entering into a slowdown. Tesla saw this, experienced it sooner. That's why they have the ability to manage their inventory better. This is evident by the growing days of supply that's far exceeding flat to single-digit sales growth. So it's accumulating, and at some point they're going to burst. So 100 days, July ended with 100 days of U.S. new vehicle highs in 5 years, nearly doubling from a year ago. So Jeff, tell us, how much longer can these traditional automakers survive when this is happening? You're on mute.
I'm surprised this wasn't in the, like the top news that's kind of going on, even on financial TV networks and so forth. When I look at the title on that graph, it doesn't even make any sense. It's almost like, and Cox does great work, by the way. It's just almost like people are trying to hide this. I don't even know what that means. Supply impacts continue to be seen overall. And that, what the slide should say is we have 5-year high inventory basically happening. Okay. And this is a real problem. And if you look at and it says new supply is 46 days higher than last year. That means it's doubled. That's actually the takeaway. You have almost 100% increase in inventory year on year. That doesn't happen in normal times. That's a real problem. And it's not like you're going from undersupplied to just supplied. Like that's what happened from COVID to being fully supplied. And that was the excuse, by the way. You were already at healthy supply levels last year in the summer. And now you've gone really overboard to unhealthy levels. And there's some real standouts in these numbers when you dig into the data. Stellantis has their average is well over 100 days. And you're already starting to see slowdowns in factories, and Stellantis has already reported a few. My prediction over the next 3 to 5 weeks is you're going to start seeing slowdown, shift reductions, and eventually full plant shutdowns from many of the major U.S. automakers. And you're probably going to start, if they're not going to warn this quarter and guide lower, they're going to warn in the following quarters, because having this amount of inventory is a major problem. The dealers must be screaming about this. This is a major issue. And if you go back and, I've been asked about Toyota. Toyota is actually, besides Tesla, the best in this lot. They only have about 30 days of inventory. But if you go look at something called their balance sheet inventory, Toyota does about $78 billion in sales in a quarter. They're, one of the biggest. But if you look at their inventory in terms of what they have on the balance sheet, it's like $36 billion. They have about 40%. This ratio of inventory to sales is at about 40%. And if you say, okay, was that a 1 quarter issue? Was it the CDK global outage? Well, then I look back at the last 4 quarters for Toyota, and basically that number has been inching up sequentially each quarter, and it's up about 20% year on year in terms of their total inventory. So to me, this is a ticking time bomb. This is the canary in the coal mine prior to an auto slowdown and a recession. I think we're already in it. And I think it starts with slowdowns, shift reductions, full factory shutdowns. It has a chain effect, I think, within the supply base. Now, you've got money flowing from the U.S. government into some of these automakers, so maybe that helps. I'm not sure. But then they did this new deal with UAW over the last year, so their costs are, continuing to go up. So this is, I would say, a scary situation. I like the decision Tesla made in Q2. They could have kept building in Q2, and they could have had a better gross margin print than they had in Q2. But they said, nope, the better thing to do is get that working capital off the books, move the inventory, get down to a healthy level. The industry is not healthy, and move on. Now, let me tell you the bear side of this for Tesla. So while they're doing a really good job managing their inventory, the fact that these other automakers are at 100 days or more with their total, again, this is not just their EVs. This is everything they build, hybrids, everything. That means that they're going to have to start reducing the cost of their product in that channel. So on the ASP side, it's going to become a little bit more competitive again. But Tesla took that big jump down, and I think they're going to be very competitive. But right now, you're seeing them do fire sales on the EV side because their EV inventory is even much greater than 100 days. For example, in the first half of the year, for every 2 EVs that GM made, they only sold 1 in the wholesale. That would be like Tesla producing the roughly 800,000 cars in the first half and only delivering 400,000. That's the equivalent of what happened there. So you're going to see the bear side for Tesla is that these other companies have to reduce costs. Sorry, they have to reduce pricing to move product. Elon's talked about it. It's going to take a little bit of time. I think they're going to burn through the EV side of it, and that's what Elon's been talking about. But then there's going to be another bump after that of the non-EVs that they're going to have to discount.
Exactly. And in fact, you're seeing a lot of that already happening. And that was one of the points I mentioned at the beginning, I think, of this recording, that is one of the bear case risks for Tesla. But when I look at these vehicles and you look at the GM, the Ford, and the Stellantis, like they've got cars like a Grand Wagoneer, which when you look at it, it looks like something from the 1990s. And their advertising campaign is based on the stereo system, which is called Macintosh or something. But who's going to spend 120 grand on a car that is just absolutely redundant? It's like a clip phone or a slap phone or whatever with the high interest rates. It's insane. And these things are just sitting on the lots. So you mentioned Stellantis. They have Stellantis and GM and Ford. They continue because they're only able to make very expensive cars. And I don't quite understand why they do that. They know the economy is in a recession. They'll be much better off making cheaper cars and selling them because the market for a 80 to 120K car is extremely small. Any person in leadership should see that. And then I learned something new that I didn't even realize existed over the last few months. There's a thing called lot rot. And I watched a guy's YouTube channel. You can't have these big trucks sitting on a lot for a year. The lubricants, all of the oils and the machinery, etc. It needs to be run. Everything decays fast. And these lots are full of these 2022 cars, 2023 cars. We're going into 2025. And there's cars that have been sitting there for 3 years now.
Wait, 2022 and 23?
Yeah. Go to a, if you're in your neighborhood, go to a Dodge Ram truck store. Walk around and look at the stickers on the windows. You'll be stunned. Wow. And so again, the people that typically buy these trucks, can they really afford that 80 to 100? Because the prices just kept on going up. Now, the other thing that's happening too is the flippening we just saw between ICE and BEVs. They're going to be able to sell less and less of these ICE cars, which is going to spiral the price. They've made no investments in reducing costs, none. And that's going to completely clobber them. And that's going to reduce their ability to sell even further. And then you got the old model of the car companies selling to dealerships, stealerships, as some people call them. And they're just pushing the inventory onto the dealerships. And now, apparently, rumor has it, and maybe Jeff, you know more about this, but that tipping point is hit where the dealerships are saying, sorry, our lots are full. Even if you're giving us free cars, we can't take them unless you want to take the 2022,
Dealers.
2023 models. It is absolutely stunning.
Yeah, that's the fifth. They want that target of about 50 days of inventory is what they want. So they have enough inventory in channel to meet their sellout velocity requirements, but they can turn it so they can continue to have new inventory come in. So you don't want it to be too low, but you don't want it up at 100. And in the case of Stellantis at 150, that means you have double of what you normally ask for. And then that's where you run into these issues of the actual days of supply increases, but the actual aging of inventory, we don't talk enough about that.
That's it.
And that's like, we're really getting into like some of the supply chain terms, but inventory aging becomes a big issue because, like that example you brought up of battery prices coming down precipitously, Tesla sees those, gets those, brings them into the factory. And remember, 18 days of inventory, it's out there. So they build the car quicker than anybody else in the factory. They have the lowest network latency in front of it. They localize all their supply around the factory. Then they get it out to customers. And by the way, the 18 days of inventory, about a third to a half of that is actually just the physical transit of the car from the Tesla factory to the end point of sale. So they actually have far less. So the point is when those battery prices are dropping or some other prices are dropping, it's into the Tesla network. Tesla sees it and absorbs it in COGS faster than anyone else. If you have 100 or 150 days of inventory, you can't get that product out and see it to consumers. You're talking about, if they have 150 days in channel, then they have all the time to get the parts in. They could have a 200-day network or more. I mean, you're talking about, over a half a year for them to see these price reductions. And that's when things start caving in. They have to discount in channel, but they can't get the new stuff coming in fast enough. And that's when it becomes a big problem for them.
Yeah, Jeff, could you take a second and explain to the audience what type of clowns are running these operations? Like, I just want to press on one point. You've got, say, the Fords and GMs. They've decided, okay, we need to drive profit into the business. Therefore, we're going to make, instead of $30,000 cars, we're going to make $100,000 trucks. How? And literally, they don't have, like, Ford doesn't have a 30,000 vehicle. They used to make some. I can't remember what they were called, but now they're just focusing on trucks and they're pro business. But how short-sighted is that? And be blunt.
Well, yeah. Well, you see what's happened with Stellantis, for example, over the last 6 months, the amount of executive departures. I know people always look at this for Tesla, but a lot of the executives, that's actually a precursor to them, their inventory is exploding and what's about to happen. These are multi-year decisions. So if you decide like how you're going to design your end-to-end network and say, look, I'm going to go direct to consumer, like that's a gigantic strategic decision for the company. And there's puts and takes to doing that. But in general, you've made a decision that by doing that, you're going to be able to turn inventory faster than anyone else. So Tesla has made a decision in all of their companies is that they want a high velocity supply chain. They want a supply chain built on speed. And once you make that decision, then everybody below Elon falls in line in making that decision. And nobody wants to build a supply network that falls outside of that. So in the case of these other companies, they're clearly not focused on it. Again, besides Toyota. And they're clearly not focused on it. And they're going to, unfortunately, see the downside of doing that. So these are multi-year strategic decisions. They cannot turn this stuff on a dime and say, I'm going to go from building supply networks that are 60 to 90 days in length to ones that can run in under 20 days. Those are major strategic decisions that you'd have to make from top down, and it would take multiple years to implement, because it goes back to the vertical integration commentary of what they built, what they make versus what they buy. And if they decide to buy something, they localize it around the supply chain and they don't let it, have like 40 layers to get that product built. So there's a real focus on this. So these are multi-year strategic decisions top down from the company.
Jeff, since you're giving away billion-dollar decision making, you mentioned 5-year high inventory and slowdowns and shifts in slowdowns in the shifts or reductions and dealers screaming. Can you walk us through what 2008 looked like for when or perhaps the last time we saw such inventory volume and potentially recessionary times?
Well, yeah, I mean, in 2019, inventory started going up to around 100 days, and that occurred, and then COVID hit. And when COVID hit, then things shut down, and all of a sudden the inventory problem was solved, but you had another problem. So the data's a little messy, but basically the way it would work is when you have this, it could be with the consumer, it could be with a number of different things, but when you're entering into a slowdown and you build up this inventory, it's basically followed by the fact that you need to do channel reductions in pricing in the channel, and therefore you're going to take your gross margin, and you have these cyclical things that happen. That's why they call it a cyclical industry. So they've had high inventory before, but what comes after it are margin reductions and earnings misses. And so this is this is the warning. This is the canary in the coal mine that says this is going to happen. Now, the difference between 2019 and where we are today is we had EV adoption in sub 1%. It was a very small number. So now what you're going to see happening is you're going to continue to see that EV adoption growing, and that side of the supply base doing well and being healthy, and then those factories doing reasonably well and being healthy. And then you're going to see this other side that kind of just caves in on itself. And I think that's what's going to be different. They're not going to have in 2019, when they came out of it, they were returning back to growth of a total available market of 17 million units, for example, in North America. Now they're returning back to maybe 13 million, maybe 12 million units. So they're returning back to a smaller pie, and that's going to be they're going to have to downsize. The other thing is what people don't realize is 1 in 3 GM or Ford vehicles are built in Mexico. And that's been quietly happening over the last several years as a lot of production has moved down to Mexico. That's one of the ways they're fighting some of the cost increases.
Okay.
No, not okay. Not okay. Before we move on, if you're not subscribed to Jeff, this is
all right.
No, I know what you're going to say. Stop it. This is why he's a Cyberbull. We absolutely treasure you, Jeff. Thank you so much. You make me smarter. You make me see things that I've never seen before. It is a pleasure to be a part of this. And, you're dispensing, like I said, $1 billion advice that I wish everyone would listen to, because your experience is invaluable to our Tesla community. And on behalf of our retail shareholders, we thank you.
You're welcome.
Okay, well, thank you so much, Jeff and James, of course. And then, perfect timing. I did find Elon Musk, what he said about this. He said other companies are dumping electric vehicles at massive negative gross margin. That's a problem for Tesla, as you guys have been saying, because now Tesla will have to match their prices, but that's not going to last. These guys are in a death throes. They're trying to get it out there, sell it as much as they can because the inventory skyrocketed. Of course, he's referring to electric vehicles, not just gas cars here too. So interesting conversation, guys.
Can I make one quick comment about that? Mm-hmm. There's the other side of this is all of these companies had very large intentions in terms of what they were going to do at volume. At one point, Ford said they were going to do 600,000 EVs, and they're going to be a fraction of that this year. So they told suppliers to spool up to a number. Those suppliers bought CapEx. Those suppliers hired people, and there's a trust issue that's built. But what happens is when you don't get to that point of escape velocity, and this is what Rivian's struggling with a little bit right now, when you don't get to that point where you can outrun your fixed costs, things kind of start folding in on top of you, and then you actually have to pull back. So when Elon says it doesn't last, he means two things. One is they're going to burn through that inventory in the channel. Two is they learned their lesson that they don't actually have the fundamental unit economics to scale. So they're actually going to put a lid on their volumes. And that lid, if you believe EV adoption is going to continue to grow and these companies have to put a lid because they don't have the right solution, that gives an opportunity for Tesla. Because somehow we have to answer the question, how are they growing production 50%? What other automaker in the world is growing production 50? What other automaker is proclaiming that or projecting they're going to grow production by 50% next year? I don't think there's any besides
It's not
Tesla.
even BYD, because what happened to BYD was they grew really quick, and then for some reason, I don't know all the reasons, but they fell, I guess China or something, but Tesla seems to have, recovered in China, but BYD's numbers have fallen dramatically. Not just in numbers, volume, but also in margins. They're struggling right now. Or I wouldn't say struggling. I'll just say not as good as they were 6 months ago.
Yeah, we're describing what the bears think about, and all I could think is they're saying there's fraud in accounting.
Yeah.
And I'm talking to them. I Grant, all of those people, and I will call out names like these. You have the Gordon Johnsons, all of these people that are just saying negative stuff. Like, which argument? And I'm neutral. Yes, I have a position, but I'm wondering, like, am I making a horrible mistake? And who do you listen to? Do you listen to those that are attributing the decline in the stock price down to 100 to some sort of fraud or a lack of innovation? Whatever they're saying, it's never, or you listen to what Jeff and James and you are saying and myself. Like, it's a completely different story depending on who you listen to. So that's to tie it together. That's how we
that's how we started this. Why Tesla? We all have our own reasons. I know we only have just the last topic here. This could be a long topic, but is there a way to keep it short? Which is, what's politics going to do to Tesla stock?
Who's first? I don't know myself.
Nobody's jumping in.
Yeah, politics
James,
is already, Tesla stock has already taken a hit. Literally, I believe
so?
if Elon did not buy X,
mm-hmm.
we'd be north of $300 easy. But he's become a very polarizing figure, and becoming even more so. In fact, let me show you two quick slides if you could pop that up.
Who here believes what James just said?
Me, 100% me. Yeah, absolutely.
Okay.
Well, remember the down spiral that you had of people?
No, that wasn't because of politics. That was because of him selling Tesla stock to buy X.
To buy X, exactly. So
he was referring to. We're talking about politics.
It's both. It's both. It's disruption. You're disrupting politics and media, right? These are two categories that Elon has disrupted by purchasing X, right? We have the voice that we didn't have before. Now you had an attempt. And now you have people like I'm in Burbank, and I saw a guy come in with a MAGA hat, with a MAGA shirt, with Trump, and this is in California with the truck outside with the American flag. That has never happened before. So what you're seeing now is, people feel that, right? That there's something happening, and they're coming out, quote, out of the closet of their political beliefs. I don't want to touch this topic with a 10-foot pole, and we
perfect timing. Your video just went out.
Yeah, right. We had a dinner. And instead of talking about the future of Cyberbulls, what did we do? We discussed politics. And so, like, this is very controversial. I just posted a tweet today in response to Yashu, who I love and respect and subscribe to on Patreon. He taught me some options stuff. This is one of those things where politics, in my opinion, it's a waste of time. So I'm going to shut up here and
we're talking
Jeff
about
handle it.
Politics Tesla affecting Tesla stock. James believes that it could have been a $300 stock if not for Elon's political positioning. Correct?
Yep. Think of it like an ESG stock, but an anti-ESG stock. There are people, money runners, that will not allocate to Tesla because they do not like Elon. This is probably the most important thing. And I noticed as well, there's been a big uptick in kind of people speaking out, but there's two things that are different this time around. First of all, if you see here, I can't really read what that slide says, something to the words of the effect, it's the number one grossing source of news, number one grossing app, etc. in the US. That's X.
Yes.
All right. So that means mainstream media can no longer control the narrative. This is the first political cycle we're going in where the media no longer has the ability to control the narrative and continue spewing the lies. And if you look, if you take 5 minutes to research the lies that the media spreads, it's shocking. And then truth is getting out. And, you know, there's the old expression from Nelson Mandela, fools multiply when wise men are silent. I think Boomer Mama shared that today, or somebody did on Twitter. And I'm like, or maybe it was a few weeks ago, I don't know. But that is so true. There are times when you get to a breaking point, you can no longer be quiet. And because of that, we have a situation right now where Elon will drive even more polarization because there's two worlds. There's those that hate one candidate and those that like the other. So if you align with one, you're just going to piss off half the planet. And then the media manipulation, I cannot be understated how dangerous the media is. And now that sound piece, that voice box has been taken away. And there will be an increased focus on Musk, I think, increased polarization as we go through the next, 100 days or so, 95 days to the elections. And feelings and emotions are going to get wrapped up. And I'm a very big believer, you look at everything in a data-driven way, you leave your emotions at the door, but sometimes people can't do that when it comes to politics. Jeff, over to you.
Yeah, I think there's a good comments. I think we have to draw a differential. First off, I don't think Elon chose this as a hobby to get into this. It's more of he felt like he had to do it. And I want to separate the mechanics of procuring Twitter and what was involved with selling of stock, because I do believe that had some impact at a certain point in time. You can look at data, you can look at the volume of the stock. There's data like you can point to, and separate, like, would the stock be higher if he wasn't involved in politics? I don't know if I see surveys out there, but I don't know who's being surveyed in the surveys. I don't understand the sampling. And if you ask a question, somebody yells at you and calls you MAGA or something if you just ask a question. So it's hard for me to understand how many more people are under the tent now because he's reaching out to an audience that may have not conventionally been looking at EVs or interested in alternative forms of energy versus the existing population of people that were more maybe into that. I don't know the answer to that question. I'm sure there's some damage, and I'm sure there's some new people coming into the fold that wouldn't have been there before. But I think it's important, given what Tesla's about to do in terms of increasing scale and changing the way transportation actually occurs, that Elon does create and have allies and maybe some enemies, but allies in terms of how to get things done in Washington with politics. So, if he can be a closer advisor to the administration, I think that would help. I think what's happened over the last 3 years, it's been almost comical. Like, you can't be an objective person and say that Elon being ignored at an EV summit or being ignored on an AI council passes the common sense test.
Yep.
And yes, I understand that he dishes it out, and he when they attack him or they try to investigate him, he responds back. And I think he should counterpunch, quite frankly. But where we are today is we're in a highly polarized climate. And at the end of the day, I think people are going to choose the best product. And I think it's going to become a greater and greater disparity of, if you have $25,000 and you have to buy an automobile, it's going to be such a large distinction of, you can go to the website and get a Tesla in a day or two that drives itself if you want it to drive itself, or you can drive it and you have the best experience at the lowest cost structure, or you can buy something else because you're mad. And I think people are going to make the right decisions for themselves. The final thing I will say is, and this could be a whole show within itself, is there is another side, the other side of this, that there are many CEOs that take political positions on issues, and it just doesn't get the same media attention. Now, Elon does it at a much higher and greater intensity, but I've actually tweeted out or posted examples of other CEOs taking major sides on political issues. It just doesn't draw the kind of attention that occurs. So at the end of the day, I think he feels he has to do this. There's some data that says that that's probably true, especially from a freedom of speech perspective. I don't think he's in this for hobby or sport. I think he feels like he needs to do it. And at the end of the day, I think it more hyper focuses him on building the best product that you almost cannot afford to not buy.
Yeah. I'll say
that's true. It does bring out that wartime CEO element, but one other element as well, the complete hatred for disruption and change of the system, whether it's media or financial services or global telecommunications or the oil industry or the ESG narrative. It is just shocking. If you look at the hit pieces written by players like Reuters, sometimes Bloomberg, Jalopnik, I mean, some of them are just flat out lies. But imagine a world where all of those hit pieces, 10, 20 a day, didn't come out. That has an impact, Jeff.
Yeah.
Humans are not rational. Don't think for 1 second that humans think rationally, because most of them do not.
Yep.
That's a fact of life.
No, I agree.
Yeah, I think it's hard for people to say that there's been zero impact or minimal impact to the stock or the business because of Elon's political coming out and being very, very vocal. Having said that, I still believe what you guys are saying, which is it's not about red or blue. It's about the green. It's about the green on stock. It's about the green of the product that you want to buy. That also has a significant, decision making. So it's impacted, but maybe not as big as people are worried about.
And over time, as Jeff said as well, the cream will float to the top when people have to make a decision and there's $10,000 on the line and a very different experience. People will figure out the right decision eventually. Some it may take longer than others, but that's the nature of the world.
Herbert, can I hold up a mirror?
Yeah, go ahead.
What's
the mirror?
So, couple of notes, couple of thoughts. So I'll get on my soapbox here. I pride myself on being neutral. I watch my father-in-law, complete opposite sides. I hate politics. Okay. To me, if I can't control it, I don't want to give it any mental energy. That's why I like options. I like something that I can make a decision and it happens or it doesn't happen. Either way, it's my fault. So I'll get on my soapbox and I'll say, I wouldn't change a thing about Elon buying X or Twitter. And the X-Files revealed something that to me is super important. So I'm neither a Republican or a Democrat. I actually voted for Obama the only time I ever voted because I wanted hope and change. And then, you figure out but like I'm a business owner and like I love my team. I don't want to take advantage of them. But at the same time, like I come from a communist country and I come from the USSR and I've seen it and my parents have seen it. And people need to understand that these decisions, like, don't you learn from history? And, and I don't care if you unfollow, I don't care about any of this stuff. What I care about is that what they did to Tesla in 2020 is un-American. Tesla saw in China what was the reaction to COVID. And, you couldn't even say this word previously on YouTube or Twitter. Like you were demonetized, you were banished, you were silenced, be quiet. And, Elon using his FU money, right? And telling everyone, advertisers, GFY, I think that people should really understand that he's speaking up for the little guy. And I love that. Yes, it was painful to go from 400 down to 100 and get margin called multiple times. But the best argument I've ever heard was that the Democrats outplayed the Republicans. Zuck funded $400 million to send people to the Democrats' houses to collect those ballots. And then at the end of the day, You had that last minute. Ooh, look at the camera go with those birdies over there eating at the feeder. So when Zuck funded that, then to collect the ballots, so there was no fraud. There was none of this stuff. The best thing was that they got outplayed, and so I just think that seeing this year Zuck get out of the way and say, I'm not gonna meddle with democracy. I think that's the important thing. Instead of dividing each other, why don't we come to the center? Like Elon says, the left 10%, the right 10%, and it's obviously opposite on the screen. You're going to be pissed off. And I think those are the people that are making the most noise. The reality is, if you're in the center 80%, you'll figure out which way you're going to go.
Yeah. And another little piece of breaking news as well. I think yesterday, Elon, and well said as well, Xander, but I think Elon filed a suit against GARM, Global Alliance Responsible Media, or something like that, antitrust suit. They shut down 24 hours later. So you don't shut down an association unless you're guilty of something or hiding something. So yeah, I'm totally on Xander's page. I have no interest in politics, never have, never would, but sometimes politics and our futures are inextricably linked. And there was another thing flying around earlier today. You don't vote for who you like. You vote for what matters for your future. And that's what people really need to understand. So,
like I said, this topic could go way too long. There's so many things I could say, but I think we could probably move on at this point. So this is what we covered today. Why Tesla margins could flip for Tesla in the future, but we don't know when. Bear case, we talked about the different bears and what they were thinking about and what the potential negatives could be for Tesla. China, big milestone, right? Over 50% of are now EVs being sold. There's an inventory death march, and maybe this is like you guys have said a few times, canary in the gold mine for these legacy auto. How much longer can they survive? And then, of course, we just covered politics and Tesla just for briefly. Thank you, everybody. Fantastic. This is why we do this. As smart people we can bring on the table here. We got James from InvestAnswers, Xander, the Froyo Tycoon, and you got Jeff, Mr. Incredible. Go to his X account, subscribe. $4 a month is what I pay, and that's why I get all the gold here. So,
does James have a subscription, or are we going to subscribe to him as well?
Never once mentioned it, but there is one, yeah. And it's so funny. I actually use it just to share information, because if you share certain things publicly, you'll offend many people, and it's just specific data. There's a concept in crypto called bag holders. People that have a position in something, and if you say something or share data that is not complementary to their bag, they get upset. So that's why I use the subscription channel. People that want to see the real data, they get it there. I'm sure Jeff does the same thing, because you don't want to ruffle feathers when you don't have to, as Xander would say, probably. Mm-hmm. There you go.
Okay. Thank you, guys. Thanks, everybody. Great job. Appreciate you.
Great show.
Thank you.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.